Hi, welcome to the Market Alert for Tuesday, the 7th of July 2015. And starting off in the 5-minute chart, you will see from the morning session that prices continue to move higher, which is what I said in yesterday morning's brief Market Alert, that the gap would be filled that was left behind when the Greek people voted no for the proposals that were put forward by the European Union. And there may be a bit of semantic language flying around as usual, and people thinking that the no vote was to come out of the European Union, and that's strictly not the case. It was whether the Greek people would accept the proposals that were put forward in a meeting back in June by the European Commission, and that's what the no vote was, which is why the market has then used the gap down, as you can see in the daily chart there, to actually buy back this market and come back and fill the gap. So in the afternoon session, we see the market closing back above the 17,600 level. We've got the PTI there. The market trades higher, goes up to the 17,650 and drives through this. And as I said before, if the market drives through a psychological line, then wait to see if it continues to move higher. Here you see the market finding support, and then the market drives up to the next level, which is around 73 points profit on this trade as the market runs out of steam. In this trade here, of course, this market's already in progress, so this one is ignored. We have a sell PTI here for those who want to trade against the trade. 73 points in the first part of the session is enough to call it a day for me. As I've said before, that's where most of the money is made. But for those who did feel that there could be some profit taken in the market, you can see there the market coming back to the resistance level here of 17,700, and then the market moving back down to where it started from for another 70 plus points there. And then, of course, in the evening session, just a small move down before we see the market turn around and correct. And again, this sell not valid because of the sell in this one not being sorry, no, that's not true, because this one was actually hit here. The scalp was actually hit, but again, using the psychological levels, the market going down towards this level here. But as I say, you're already short on this one. The market's gone through and then heading down to the starting point of the session, really, the 17,600 there. So in the daily chart, you can see this gap down on the open, the market being driven back up, huge amount of volume there. And you can see the market's already higher this morning as well. We've got a bit of resistance to get out of the way here, and also here if the market is going to move back to the upside. If it is, then expect the market to head back towards the highs. There's definitely manipulation in this market. There is absolutely no doubt. The Federal Reserve does not want the stock market to go down at this point because of the offloading of stocks, but more on that in another market alert. So again, watch these two areas here, 17,825 and 17,846, both important levels, because this is where all of the Greek nonsense has started. We saw the gap down a week ago on Monday, and now we have this one with the no vote for the proposals that were put forward by the EU on paying the debt. And if you want to actually see the question that was asked the BBC, you can see it here. It was a referendum, and should the plan of agreement be accepted, which was submitted by the European Commission. So again, this is not a case of do you want to stay in the EU or leave, if you accept it or not accept it. So that means that they'll probably come back with a new deal now, or which I know there is a meeting to take place today. So again, it's just a matter of time, see what actually happens with this. I hope they do leave, as Iceland in 2007 said they wouldn't print money to pay the bankers. The banks had to go bust, and they have a thriving economy now. So you never know, being out of the European Union may not be all that bad. The problem is, of course, is a knock-on effect to everybody else that's left that has the same amount of debt, who will also want that writing off, and that's where the problem is. It's the confidence in the IMF is the issue here. And finally, in the implied volatility, 1475, this is for Friday Thursday actually, because the market was short for independence on Friday. 1531, you can see there the increase in implied volatility for yesterday, and this pulling back slightly from the high that we've had, but up a bit from Friday, but not up significantly given the 300 point or 250 to 300 point gap down that we saw yesterday. Right, that's it from me. I will see you in tomorrow's edition. And actually, just before we go, I've just thought about it. We've not had a look at the news, so let's have a quick look, see what we've got out today. Manufacturing production from the UK. We've got the Eurogroup meetings as well, of course. That's to talk about Greece. In the US, 3 p.m. we've got the nice GDP estimate. It'll be interesting, in the jobs openings. That's also going to be out as well at 3 p.m. Both medium impact news items there. Right, that's definitely it from me. I will see you in tomorrow's edition of the Market Alert. As ever, thank you for your support, also for watching, and see you in the next one.